Before we get into today's episode, I just want to say I appreciate all of you guys always watching, liking, subscribing, commenting on the channel. You guys know how YouTube deleted my other accounts with 250,000 subscribers, and that's why I made this new account. Fortunately, we did get those channels back, but I want to continue to grow this channel. I love all you guys on this, and I really appreciate you guys always liking and commenting. I read everything. But anyways, right now the entire crypto market is crashing, down about 5.17% over the last 24 hours, and many people are wondering, you know what should we do next? Should we get out of crypto? Should we move over to the stock market? Or are we going to bounce back and recover? So in today's video, we're going to go over a couple of main things going on in the crypto world. We're going to start off by talking about the crypto crash. We're going to go over a warning from the Big Short, Michael Burry, what he had to say on Twitter, and how he actually deleted his post where he talked about something specifically relating to meme stocks and cryptocurrency. After that, we're going to talk about crypto mining and a new firm that's going to be listed on the NASDAQ. Moving on, we're going to talk about Bitcoin miners and leaving China, potentially going to Miami or Texas. After that, we're going to talk about the World Bank refusing to help El Salvador with implementing Bitcoin as legal tender, which is major, even though many countries are already starting to talk about this. Then we're going to go over a couple of altcoins, and make sure to stick around until the end because we're going to go over something major. Very exciting about one of our favorite coins on this channel, which is Polygon. A couple of things came out which are very surprising in relation to Ethereum, and I think is actually really great news. But anyways, let's get right into it. So right now, the entire crypto market is down about 5.17%. We're seeing Bitcoin at 5.73%, Ethereum's down 5.8%, Binance Coin down 4.3%, and surprisingly, Dogecoin broke below a key resistance of about 30 cents per coin. Now we're in the 29 cents per coin range. Pretty surprising there. And big news that happened recently was we saw Coinbase list a bunch of new altcoins. We saw Polkadot, we saw Shiba Inu, we saw a lot of new altcoins listed on Coinbase, which is positive, but overall the market is still down big time. And one thing that came out recently is, according to Michael Burry, who is labeled the Big Short, he was why the movie was made, he explained how he expects there's going to be a major crypto crash coming. He said he called it the mother of all crashes on Twitter, and exactly what he said is all the hype and speculation, all it's doing for the markets right now is drawing in retail investors before the mother of all crashes. And when crypto falls from trillions of dollars down to billions of dollars, or meme stocks fall from tens of billions down to, hundreds of millions, well then Main Street losses will approach the size of entire countries. History ain't changed. It's going to happen again, just like it happened years ago, and how it's happened multiple times in the past. He says this is nothing new, and people think this time is different, but it's not different. He goes on to explain how right now, people's fear of missing out has propelled a lot of stocks and a lot of cryptos to prices that they should not be at all. For example, he explained for AMC, for GameStop, these stocks, while he did suggest buying them back in 2019, he explained how now, at this point, what has happened with some of these stocks and with some cryptos is just unnatural, and it shouldn't happen at all. And regulators need to step into place for at least the meme stocks, because it's not natural, and we're not going to see a sideways consolidation. That's not what happens, he says, with these types of markets. What we typically see is a major correction that happens all of a sudden, and people lose all of their money. All the money they had invested, people lose all of it. We saw something similar to this, not exactly similar, but with Mark Cuban the other day. I don't know if you guys saw, but Mark Cuban, he had talked about a coin. It went all the way down to zero. It went from $60 down to complete zero, went kaput overnight. We'll go over that a bit later, but just interesting to see how people are getting very hyped about crypto, very hyped about the stock market, and they start to leverage everything. They go in, take all the margin they possibly can, and that's where you run into big problems, where you lose a lot of money. There's nothing wrong with putting your entire portfolio into crypto or into stocks, but the problem you run into is if you try and go 2-3x of margin, then if the market drops 30%, you're screwed. You're screwed, you're gonna lose a lot of money. So it's not that I'm saying don't invest. I'm actually still very bullish on crypto, very bullish on it, and I'm continuing to add over time. But if you are gonna do riskier plays, just be careful going all in with margin, because that's where you really can put yourself in a tough position, especially the way that margin works is if the prices go down only 50%, you're going to have to sell everything off. You're going to have to pay back the margin. You're going to get margin called, and it's just not going to be a good sign. So right now, he is predicting that there is going to be a crash, a monster crash with crypto and with meme stocks. And for crypto, that could push Bitcoin, he says, back down below $20,000 per coin. I personally think that right now we have been between $30,000 and $40,000 per coin for a while now for Bitcoin. Bitcoin's price has stabilized ever since we reached that record high of about $65,000 per coin earlier in the year. And now what we're seeing is that, yes, it has been dropping over the last 24 hours, but if we look at the last 3 months, let's say, ever since May 24th, since we had that big drop from 65,000 down to about 30,000, we have seen it really hover between $30,000 and $40,000 per coin. Yes, we've had it drop to about 31,000 or even 30,000 a couple of times, but we have remained above that key support level. And so that's just something to keep in mind. If we see it break below 30,000, well then I would say, okay, maybe we've entered a bear market. Maybe things aren't going to bounce back as quickly as people are expecting. But in my mind, what we're seeing right now is, you can see on the charts, we have touched $32,000, $30,000 per coin multiple times. And really now, we have just been fluctuating in between this range. We're holding strong. This is a good sign, in my opinion. I don't think there's anything to worry about. I think we're going to continue to see more consolidation happen. And when there's a big catalyst, when we see hedge funds or institutions pour money into crypto, that's when we'll probably see the market really start to like a second bull run in the second half of 2021. So that's what I think. Michael Burry saying there's going to be a big crash. Me personally, I don't agree with that. I think, it is possible, but right now where we are staying above that key support level of about $30,000 per coin for Bitcoin, and I think we'll have to keep an eye on that moving forward. Next up, I don't know if you guys have seen this, but right now there are a couple of major crypto mining companies that are listed on the NASDAQ, in the stock exchange. Some of them are like Riot, R-I-O-T. There's another one called Mara, M-A-R-A, and also Bit Digital, BTBT. All of these are stocks that are publicly traded on the US stock market, and we're going to have another company coming. A company called Hive Blockchain is officially been approved to list common shares on the NASDAQ. Right now, it's publicly traded on the Canadian stock exchange, but we will be listed on the NASDAQ, which is exciting because what we're seeing is a lot of crypto firms, a lot of people that want exposure to Bitcoin and Ethereum, and a lot of ETFs that want exposure to Bitcoin and Ethereum. Since we don't have a Bitcoin or Ethereum ETF yet approved in the US, what they do is they invest in Coinbase, they invest in these Bitcoin mining companies. So being one of the major companies and entering the space, Hive Blockchain, it's going to be, I think, very positive. I think this stock is something you definitely want to keep an eye out on, because once it goes public, once the shares are listed, I think we'll probably see a lot of these ETFs that want exposure to crypto start adding this to their positions, adding this to their portfolios as well. It is one of the largest Bitcoin mining companies. It went public in Vancouver Stock Exchange, the Toronto Stock Exchange, back in 2017 under the stock ticker symbol HIVE, H-I-V-E. Shares have gained about 33% for the year for this, and it'll be interesting to see how this plays out. It owns its own data center facilities in Canada, Sweden, and Ireland. It mines Bitcoin and Ethereum every day, and I think it will be a stock that, we talk mostly about crypto and tech, but this is a stock that you want to keep an eye on because it is a Bitcoin mining company, and it is a way to get exposure to Bitcoin without directly investing in Bitcoin. For example, for ETFs and hedge funds, they'll be pouring money into this. If you want exposure just by investing, like diversifying your portfolio in the stock market, this is something you can look at as well. I don't know if you've seen this story. Actually pretty interesting with Miami. Miami had the Bitcoin conference a couple of weeks ago. Very exciting stuff happened there. We had the meme with Dogecoin, the guy who ripped off his suit, had Doge, merch underneath it. That was exciting. But now the Miami mayor, he's been all for crypto. He has been the most outspoken for crypto out of any mayor in the US, really, in terms of a city, Miami. And Miami mayor came out and tried to entice China's Bitcoin miners. He said, "We want you to be here." He said he hasn't personally spoken with any Bitcoin miners in particular, but he wants people to know the door's open. They're wanting to work with Bitcoin miners, wanting it that they can succeed and want them to come to Miami. So first of all, Miami does have a couple of competitive advantages over other areas. And since Bitcoin miners have been banned from a lot of parts in China, they're looking towards the US. And one of the states that they're looking at is Texas, another one is Florida. But with Florida, a couple of things to keep in mind is the Mayor Suarez, he said, "We want to make sure that our city has an opportunity to compete." And they're able to do this because right now in Miami and in Florida, nuclear energy is actually one of the most prominent energy sources in the state of Florida. And it is a source of clean, inexpensive energy that most states don't have. So based on how much they're able to actually mine Bitcoin for and consume energy for, according to the Bureau of Labor Statistics, the average electricity per kilowatt hour cost of 10.7 cents in Miami versus the national average of 13.3 cents is a very promising thing for Bitcoin miners. The one way that Bitcoin miners compete with one another, the one way that they can say, look, how are we going to make more money? Well, there's limits to how much Bitcoin we can mine. We only can buy so much equipment and we're going to make the same amount of money. So how can we increase our margins, make more money for every Bitcoin mined? The only way to do that right now, the only variable cost is how much you pay for electricity. And with Miami having nuclear energy and these nuclear power plants nearby, it's very inexpensive power and it makes them about 30% less expensive than the national average in the US. So if Bitcoin miners are moving from China to the US, Florida is definitely a pretty promising option, a pretty attractive place for them to go just because of this cost advantage of being in Miami. He also said that they're considering other incentives because they really want people to come for Bitcoin and Bitcoin mining, and they're going to consider enterprise zones specifically for crypto mining. These zones would be like tax areas with tax benefits, infrastructure incentives, and scaled back regulations, which would be offered to Bitcoin miners who decide to move to Miami, do business there versus going to Texas versus going elsewhere in the world. So this will be something interesting to just keep an eye out on moving forward. We have not yet heard of any specific negotiations, but what we do know is that Bitcoin miners have been banned from China in a lot of places. Inner Mongolia was one of the most prominent Bitcoin mining locations, completely banned Bitcoin mining just a couple of months ago. And now these miners are not going to shut down operations, so they have to look elsewhere. Where can they mine Bitcoin? Where is it going to be cheap? And Florida is trying to be the Bitcoin hub, the crypto hub of the world. And they can definitely do that if they have more Bitcoin miners and more companies for crypto coming to the city. So we're seeing them make a major push. I think it's working. We saw the Bitcoin conference happen there. We're seeing the mayor talk about incentives that could be for crypto companies. The plan is there. Now it's just a matter of time to see, are these plans going to pay off? And are we going to see these incentives attract people to Miami versus going elsewhere? My opinion, I think it will work, but it's just going to be a matter of time before we see. Let me know what you guys think. Now on to the World Bank. So the World Bank actually refused, flat out rejected, to help El Salvador implement Bitcoin as legal tender. So we all remember how El Salvador became the first country ever to pass a bill that legalized Bitcoin, made it legal tender in the country. So they could, have to accept it at all stores, all locations. The problem is right now with Bitcoin and crypto is it's great that they legalized, they made it legal tender, but the problem with it is that the only way you can actually use Bitcoin is if you have access to the internet, is if you have a smartphone or a device where you can easily buy, sell, trade crypto, and also if you have data on your phones. Let's say you're doing it on a phone. And the problem with El Salvador right now is that out of all the countries in Central America, it is the second worst in terms of internet connection, only ahead of Honduras. Honduras has worse internet connection than El Salvador, but El Salvador is the second worst. And that's important because that means it's not easy to get crypto and Bitcoin actually accepted at stores and locations if people don't have access to the internet. If internet is patchy in rural areas and you don't have access, you can't pay with Bitcoin. It's not possible. So that's an issue. The other issue is with devices. Since El Salvador is a very, it's not the most economically sound country. It's not a powerhouse by any means in the world. So the problem with that is that many people in the country don't have the most up-to-date devices. They might have rundown devices that are broken, and they might not get them fixed all the time. And that's happened in a couple of cities in El Salvador already. And if that happens, again, you can't use Bitcoin. And the third thing is with data plans. If people don't have enough data on their cell phone plans, it's going to be hard to pay with Bitcoin as well. So the World Bank said that they're not going to be helping El Salvador implement Bitcoin as legal tender because they are worried about a couple of things. They're worried about illicit activities, illegal activities taking place with Bitcoin. They're worried about energy consumption, and they say by them helping El Salvador, it would be promoting something that isn't great for the environment, that isn't great in terms of, illegal activities. So they said they're not going to help. El Salvador, luckily, is going to get help from the Central American Bank of Economic Integration, the CABEI, which has 15 member countries. They said they will provide technical assistance to help El Salvador implement Bitcoin as legal tender. But you got to remember, I think this is great. I think we're going to see more countries more countries are already starting to talk about implementing Bitcoin. But the problem is that many countries which are talking about making Bitcoin legal tender are not in the best economic positions. And because of that, it's going to make it a little harder for those countries, because the countries that could implement Bitcoin the easiest are the ones where people have great internet service, or where people have smart devices, or where people have large enough data plans where they can always be paying with Bitcoin, paying with crypto. And the problem is a lot of countries that are going to be looking to actually make Bitcoin legal tender are in the complete opposite position. They're struggling economically. They're looking for a way to potentially spur growth in the country, and they just don't have the best internet access, people don't have the best phones, and it's just going to be a little bit harder. So that's why this is going to take time, in my opinion. I think it's definitely going to work, definitely be something we're going to see with more countries like El Salvador. We're going to see Tanzania's already talking about. We're going to see more places start to at least talk about implementing Bitcoin, but it is going to take time for these countries to do it just because of the infrastructure that needs to be built up. And it's unfortunate, but it's something that is going to delay actually seeing Bitcoin, like going to a store and buying something with Bitcoin regularly and making it so all stores actually accept it. Because even if the central bank were to help El Salvador, it's still not that easy. It's a little harder to actually implement. Moving on, something very exciting with Polygon came out the other day. And the data was very surprising. I like to look at the data. That's what I'm looking at when I'm investing in crypto, when I'm investing in stocks. I like to see the big picture, but also data is very important to me. And one thing with Polygon is that institutional investors are actually moving over to Polygon, picking it many times over Ethereum, as Ethereum layer 2 demand continues to increase according to blockchain data. So according to the blockchain data, it shows that there's an increasing number of large investors and institutions joining the Polygon network. And at the beginning of June of 2021, about 65% of daily stablecoin transaction volume on Polygon came from transactions with values above $1 million. So that means that a lot of the transactions taking place were with people who were playing with over $1 million. So that's either big investors or institutions. It's really both. Because most people are not going to be not going to be transacting with over $1 million, especially on Polygon. People might be doing it more on Bitcoin and Ethereum, but you got to remember Polygon is a smaller altcoin in terms of market cap. It is in the top 20. It's ranked number 17 with an $8.5 billion market cap, but still, you're not going to see $1 million transactions all the time. So this is a sign that decentralized finance whales are shifting from Ethereum to Polygon, which is something very exciting. As a Polygon investor, I invest in both Polygon, Ethereum. I invest in both of them, but it's very exciting to see because Polygon has a lot more upside, in my opinion, at least in the short term, than Ethereum, because Ethereum already has a market cap that's in the hundreds of billions of dollars. Yes, it can easily 10x from where it is right now, Ethereum, over the next couple of years. But Polygon can grow very large as well. And right now, when you're looking at Polygon, why we're seeing these people switch over from Ethereum to Polygon is that there's cheaper yield farming, there's high frequency trading opportunities, and a lot of this is less expensive to do on Polygon than on Ethereum. So even if Ethereum fees are reduced, they're not as high because whales aren't making as frequent of trades, they can still do higher frequency trades on Polygon at a less expensive price, which is something very, very interesting moving forward. And you can see here's the demand, the percentage of total volume and transaction size. You can see that Polygon versus Ethereum, Polygon is beating Ethereum in terms of the 1 million plus range, which shows that we are seeing whales, institutions moving over to Polygon versus Ethereum. So one thing I've been getting asked a lot is, Michael, what's going to happen when Ethereum 2.0 is released, EIP 1559, what's going to happen with these upgrades? Is it going to just cause Polygon to disappear because it's not going to be needed anymore? But the reality of this is that some users and funds are probably going to want to stay on Polygon because it's going to take longer than people expect to get ETH 2.0 rolled out. And as it takes longer and longer to do, some people might be willing to sacrifice some aspects of decentralization, access to innovative protocols in exchange for having cheaper gas fees and being on the Polygon network. So I think Polygon and layer 2 solutions are going to have a big role to play no matter what happens with Ethereum. And I think Polygon is going to be probably the most prominent and the biggest layer 2 solution in terms of Ethereum down the road. We're already seeing many people like it. Mark Cuban personally invested in it. We saw that didn't work out great with him with some of his other investments, but this is a company, project that is very interesting, what they do. If you believe in Ethereum, Polygon is like piggybacking on Ethereum. It is just like a brother or a sister. It's helping out Ethereum's network, making Ethereum even better. So it's never going to be bigger than Ethereum, but it definitely can grow right along with it. And lastly, the big story of the last couple of days was Mark Cuban. Mark Cuban was hit by Iron Finance token crash, and he lost a lot of money. We don't know how much, but what happened is there's a coin called Iron Finance token. Many people have already heard of this story, and what happened is it went from $64, $65 per coin over a couple of hours down to nothing. Really nothing. It went to 0.0000000295585. Nothing. It was worth zero. And it went from $2 billion in liquidity down to nothing in a matter of a couple of hours. And people were saying this is a complete scam. They were scammed out of it. Why did Mark Cuban even talk about it on Twitter? Because he spoke about it just a couple days ago on Twitter, saying how he was invested in it. Everyone says, why would he do this? And some people are blaming him. They're saying that, he couldn't have just been that ignorant, that lazy, and not have done his research on an investment he made. But he said that was the reason. He says he didn't do his research, he was lazy, and he should have been more careful. But many people find that hard to believe. And what happened with this project is essentially what they said happened. It was the first ever bank run. So, for example, if everyone tried to go to the bank at the same time, if you and everyone in your city went to one bank at the same time to withdraw your cash, that bank would not have enough money. It would not be able to pay everyone the money they have. Even though, you technically have your money in that bank, there's not enough money to pay everyone out. It's just not how, they don't have the money to do that. They don't keep enough cash on hand, and it's not collateralized one-to-one ratio. So what happened was essentially a negative feedback loop was created, and this was a result as a couple of large accounts, large holders, tried to redeem their Iron tokens and sell their Iron Titan. And as soon as they did this, it started to create more fear in the market, more people sold off, and then all of a sudden, it basically went to zero because it wasn't able to pay people their money. And this is a problem. This was a big problem. So Mark Cuban came out after this happened. He said he was in the same boat as everyone else. He is not happy at all, even though it was a small percentage of portfolio. But what this is spurring conversations about now is regulations on decentralized finance coins and some stable coins. Because he said, should we require $1 in US currency for every dollar or define acceptable collateralization options like US treasuries? Or like, what do they need to do in order to be able to call themselves a stablecoin? Do they need to be a 1-to-1 ratio, like collateralized in a 1-to-1 ratio, in order to say that they are a stablecoin? Or can it be lower than that? So it'll be something interesting to see play out, but this is something that was the first of this specific situation to happen. We have seen scams happen in crypto before, but nothing really similar to this. This situation was different because it was similar to what would happen with like a bank run, at least according to the company, according to the project. Is it 100% accurate? No way of knowing, but it'll be interesting to see if stablecoins in the future have some regulations behind them, or if they're going to continue to have, be able to be decentralized, do whatever they want. But I think, it would be good to make sure that if people have stablecoins, their money is protected, because that's the whole point of a stablecoin, is to make sure it doesn't move back and forth and it is level. That's like really the whole point of a stablecoin in the first place. A lot of the main reason to have stablecoins. So we'll see what happens there. But that's what's really going on in the crypto world today. I hope you guys enjoyed today's video.